And good evening, everyone, and welcome. I'm Tyler Matheson.
I'm Sue Herrera, filling in for Susie Garab. It was a wild day in the markets, with stocks kicking off the new week, closing to the downside as investors weigh the political and economic fallout of the conflict in Gaza and the crisis over that downed passenger jet in Ukraine. And as the investigation into the exact cause of that incident crawls along, President Obama asked for Russia's help at the site of the tragedy, but he stopped short of outright blaming Moscow and made no mention of a ramp-up of economic sanctions.
If Russia continues to violate Ukraine's sovereignty and to back these separatists, and these separatists become more and more dangerous and now are risks not simply to the people inside of Ukraine, but the broader international community, then Russia will only further isolate itself from the international community, and the costs for Russia's behavior will only continue to increase.
On Wall Street, stocks began the day sharply lower, with the Dow down as much as 125 points, but the major averages battled right back. And at the close, the Dow was down just 48 points. The Nasdaq was lower by 7, and the S&P 500 off by 4. The volatility in equities impacted the Treasury market as well, with the yield on the 30-year bond dipping as far as 3.24%, the lowest level since June of last year. Bob Pisani has more now on the swings in the market today, what investors are focusing on and not focusing on.
The markets started down and they stayed down until President Obama spoke shortly after 11 a.m. Eastern Time on the Ukraine crisis. He called on Russia to use its influence with separatists to allow investigators full access to the crash site. But stocks began coming off their lows when it became clear he would not announce any new sanctions against Russia at that time. Now, despite the tragedy, the markets have taken the crash in stride because the economic impact on Europe and the U.S. so far is still limited.
The market believes they are containable, so that while they are tragedies, they do not spill over. Even if there are spillover effects, it doesn't matter. Earnings are strong, and the Fed is there.
Indeed, with a little less than 1/5 of the S&P 500 reporting, earnings are up almost 7% compared to the same period last year. While revenue growth is still modest, companies are continuing to find ways to cut costs and thus improve earnings. And that, along with continuing low interest rates, are the main factors keeping the indices near historic highs. European Union foreign ministers meet tomorrow, and despite the rhetoric, the market still believes no big sanctions will be coming against Russia in the next few days. But that could change if separatists continue to block access to the crash site. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.